Hi, this is James Shug with Westpac London's end of day report for Friday, January the 6th. Bit of a choppy day on equity markets with a bias towards weakness today. I'll run through the main news stories and then give you the market numbers. The big story today was the 200,000 increase in non-farm payrolls or employment reported for the US economy in the month of December. Now there were slight downward revisions to earlier figures worth about 8,000 jobs in October and November. But the December outcome was stronger than the 150,000 odd forecast or consensus. And the detail was pretty solid too. There was a 0.2% increase in hourly earnings, a 0.5% increase in hours worked in December. That followed weak earnings and hours numbers in November, and that suggests that at the very end of last year that household income growth was reasonably solid. The unemployment rate fell to 8.5%, and with back revisions to the household survey that's used to derive the unemployment rate, there's now a pretty clear downtrend in the unemployment rate from a recent peak a year or so ago of 10%. And certainly in the last 4 or 5 months we have seen that downtrend continue. The report showed broad-based gains across all industries with the exception of government jobs, and that reflects ongoing weakness at the state and local government level. We've been seeing job losses there for quite some time now because of budget constraints. And the other sector to show a decline was temporary jobs. But that's not necessarily a bad thing. If more permanent full-time jobs are being put on at the expense of temporary jobs, that could be a sign that the economy is showing some jobs momentum, some sustainable jobs momentum. The report also showed 6 consecutive gains in the separate household survey measure of employment. That's the first string of 6 gains or monthly gains in a row that we've seen since 2006-2007, so for 5 years. And it's another sign that maybe the labour market has actually kicked up another gear. So a pretty good jobs report out of the US. Other news from the America though suggests that there's still concern about the economy, justifiably so in our view. The New York Fed President, Bill Dudley, he called on the government to do more to support the housing market and said that the Fed may yet need to ease monetary policy further, quote, to improve the economic outlook and make monetary accommodation more effective. Westpac's view is that there is still a decent chance that the Fed might embark on a further round of quantitative easing at some point later this year. In Canada, we saw an 18,000 increase in employment in December, but that followed sharp losses in October and November. And in fact, the average monthly gain in employment in Canada is just 1,000 jobs per month in the second half of 2011, and that compares to an average monthly gain of 32,000 a month in the first half of the year. So in Canada, it looks like the jobs momentum really has slowed, whereas in the US, we're seeing a fairly steady pace of jobs growth. The quarterly average gain in the Q4 last year in the US was 137,000, and that compares to 131,000 monthly average jobs gain through the first half of the year. So still growing in the US as opposed to the softer story in Canada. In Europe, we saw a mix of outcomes for the various business surveys, a slightly less weak business climate index, but a weaker reading, in fact for the 10th month running, in economic sentiment as reported by the European Commission. We saw retail sales figures for Europe, or Euroland, down 0.8% in November, and the 2.5% annual pace of decline actually is the weakest we've seen since the third quarter of 2009. So that's evidence that the European consumer is continuing to lose momentum. Another sign that the European economy is on the cusp of, or possibly even already in recession. German factory orders, they fell almost 5% in November, reversing a similar size gain in October, and following monthly declines worth about 8% right through the September quarter. So in other words, in 4 of the last 5 months, we've seen some pretty hefty losses in terms of the German factory orders picture. Another sign of the weakness that's emerging in Europe. That's probably the main news on the economic front. We had some analyst downgrades of some of the US investment banks. Alcoa, who kick off the earnings season next week, they've shut down a smelter and have downgraded their forecast for their aluminium output. So that injected a negative tone. Both those stories, the investment bank story and the Alcoa story, injected a bit of a negative tone into the equity market, given the upcoming earnings season. Expectations about that earnings season may have been downgraded somewhat today. Nothing really fresh in terms of the European sovereign debt story. Ongoing concerns there, of course, but no real fresh news. So that's about it in terms of the events today. In terms of markets, just heading into the European close, it's just on 5 o'clock in London now. We've got the London market, the FTSE up 0.5%, but losses elsewhere in Europe, with the French market down 0.25%, the Germans are down 0.6%, and the Italian market's down 0.8% today. The US market's been struggling a bit. It's down 0.2% at the moment. That's the Dow. We're looking at a level there of 12,393. Obviously, quite a few more hours of trading still to go. But interesting that pretty decent looking jobs report wasn't enough to push the market into sustainably positive territory. Commodity markets today, not too exciting. We've got a copper price gain of just 0.2% to report. Gold prices are pretty much flat today, $1,621 an ounce, and oil prices are off 0.4% at the moment. We're looking at $101.37 a barrel. The Aussie dollar is at 1.027 against the US dollar. That's down from just over 1.04 against the US earlier this week. So a bit of a choppy day for the Aussie, but trading clearly under 1.03 for most of today's session. I think that's about it. Nothing much else to report. It's good to be back, and I look forward to speaking to you again next week.